All potential buyers ask, how much will it cost me to buy a home right now? It's a great question, but here's another question worth asking. And that question is, what would it cost me if I don't buy right now? It's equally as important, maybe even more important. I get it because mortgage rates, the prices of homes, what your monthly payment is going to be. Those are reasons to really explore, that question of what it's going to cost. But, rent, it only purchases housing to live in, but it doesn't purchase ownership. And that's a huge difference. If you look at, a 1 year, 5 year, 10-year, prediction on what it costs to rent versus what it costs to own, you see there's a significant difference there. And it's one model that you can easily, look at. So you have to weigh your buying costs versus waiting costs. That's really important. You have to stop trying to predict a perfect model, a perfect market, because, a perfect market is only obvious in hindsight. It's hard to know the perfect market, and everyone's situation is different. So the perfect market really depends on you. I hear it all the time, that rates are too high, but rates are probably not going to come down, unless something significant happens. And then it might not be, as beneficial to buy. And that prices must fall and next year will be better. Well, that's not necessarily the case. We see that that's not happening right now. Prices they're pretty sticky. You have to look at timing versus whether the market is right for you right now. And that, the question is, can I reasonably afford the payment to own a house right now? That's probably the best question to ask. And does ownership fit my likely time horizon? That's another important question. It's hard to wait for someone to declare what the right time is or the perfect time is. It's really dependent on you and your situation. And that's important. That means, you have to understand what your situation is and the market. And those things might work together well, or they might not. Buying has visible costs. There's no doubt about it. But renting has costs too. Right? If you're purchasing a home, you got to look at the principal. You got to look at the interest, the property taxes, insurance, possible homeowners association fees. Maybe there's a special assessment. If you're a new home buyer in a new construction or a new build, you're going to pay that. The maintenance you're going to pay, the closing costs, those upfront costs you got to pay when you're purchasing a home. But there's also that opportunity for the cost of cash, right? What is it going to take right now? How much is that interest rate going to be? So those are things that you really have to consider, and you have to look at it not just today, but long term. What does it mean today? What does it mean 5 years, 10 years down the road? Don't treat the principal as cost in the same way as interest, because your principal becomes equity, and that is subject to property value and selling costs. Those things are factors in case you want to move off that home, but you are gaining equity in your home as you make those payments. So, what is your monthly cash flow comparison to owning versus renting? Let's take a look. Let's run the numbers for you and your situation. Let's not guess, because you may be ready to purchase now, and maybe you won't be, but we could get you ready. Waiting is not automatically wrong. There's no doubt about it. But it's not financially neutral either, because just simply waiting to wait, you could be losing out on money. And that means something down the road. Potential effects include, more rent paid. And your rent goes up. It could go up about 3%, per year. Delayed principal reduction. So you're missing appreciation as your values rise and as you make payments towards your home. The possibility of a different rate later, if you're worried about your rate, that's potentially a refinance. That's something else. We'll talk a little bit more about that, but that's something that you can think about. Prices and rates, they can fall, there's no doubt, but there is the opportunity for wealth later on down the road that you have to consider. You don't want to pass up that opportunity if you don't have to, because you're missing out if you're simply deciding to rent because it's an easier path. Renting is not free because you avoided a mortgage. Those money go to someone else's pocket and someone else's mortgage. Let's put two reasonable paths side by side, right? And we'll kind of look at what it would be to be or own a home or live in Stockton, Lodi, and the San Joaquin County in the Valley. And if you're basing your home on a $475,000 purchase with 5% down, 6.65% fixed rate, that is going to be what we're going to use as kind of our standard. Now I won't get too much into the numbers. Compared to, say, you're paying $2,423 for a 3-bedroom home that you're renting, and there are significant differences that play out over a 1, 5, and 10-year comparison. Your total cash outflow for a mortgage versus a rental is significant because a mortgage, you're going to have to include your taxes, and you're going to include your insurance, and that's a factor in what you're going to pay each month. But there's probably about a $30,000 difference over a 3-year period, renting versus owning. But what do you get back is the key question, right? Based on those numbers. And that's important because what you don't want to do is think because you're paying more now that you're not going to get even significantly more later. Well, here's the thing. You're never getting that money back that you're paying on rent. So if you're going to pay $90,000 over 3 months based on that rent price, that money's gone. Now, if you pay $120,000 on your owning a home, your returns can be quite significant. You would end up on a 4% appreciation over a 5-year period, miss out on potentially $120,000. That's if you paid someone to sell your home. So that's significant. Those are the kind of numbers we can look at. And furthermore, there's a potential to refinance down the road, like I said. Now, the thing about refinancing that you have to understand is that just because you own a home doesn't mean you automatically qualify for a refinance. You have to still have the same qualifications as when you're buying a home, as when you refinance. And that's something that you want to know going in, right? So if someone tells you, well, you could just refinance later, you have to know that, yes, you can, but you're going to have to want to do it for the right reasons. And getting into a fixed home loan is the best path if you can do it, and especially if the rates are decent. You might not get those, rates you got when you were 2.65 and that kind of rates, but rates still are affordable. You can still afford a home. So, those are considerations that you need to think about when you're thinking about the renting path, the renter's path versus homeownership path. There will be times that waiting makes sense. Sometimes I may tell a client, maybe now is not the right time to purchase. Of course, it's ultimately the client's decision, but I do not want to put a client to a bad position. Waiting might be the wise thing if their income is not stable, or they don't have, adequate reserves, or if the payment is just plain unaffordable for them right now. And we all know about affordability right now. We know what that means. If they have high interest debt, or if they're looking to relocate anytime soon, it might not be the right time to purchase a home. So that's something that, we'll certainly discuss. But that doesn't mean we can't start planning now, because your situation can change. And some people just don't have don't want to deal with what being an owner means. And that's real. And if you don't want to do that, that is perfectly fine. Again, you're going to have to pay for your own repairs in your home. There's ways to manage that. There's insurance for that. But again, there's a cost with that as well. So that's something that you have to think about. That's important. So I may tell a client, maybe it's not the time to purchase, but if it's the time to purchase, and if you can do it, absolutely, the rewards are, tremendous. Your decision deserves more than a headline. For renting, the current rate, realistic rent change scenarios, renter's insurance, moving cost, potential investment of cash not used when that you would have used to, say, if you were a homeowner, those are things that you have to consider, right? Because there's potential returns on that. I don't know if it's going to equate to what you would get on the returns of owning a home, but they're still there. It's still something that you have to consider, and you have to have money to close your loan, and you have to have all those things that come into play. Again, your HOA, your special tax assessment. That one got me. I wasn't expecting that to be that big when I moved into this home. It was a brand new purchase, and it was a significant cost. So you got to make sure that your real estate agent or your builder is telling you, up front what that potential might be. Of course, a change in your income, although those are things to consider. And maybe you're going to have a change in your time you want to stay in your home. So those are all factors that you have to think about, right? So those are things that we are going to analyze when we are looking at your individual situation. Again, it's not always about the market. The market is important, but it's also about your particular goal, your particular situation. So my goal here is clarity, not pressure, right? I don't want to pressure anyone into purchasing a home, especially if they're not ready, or if it's not feasible, economically, or whether they're, they just can't afford to do it right now. But your agent should help you assemble the information needed that's going to provide all the facts you need to make sure you have the information to make that decision. A good lender, even a tax professional will help you, because there's tax breaks you have to consider, right? You get to write off your interest on your home. And so that means you get more paycheck in your pocket. You're going to pay more because you own a home, but that's still more money in your pocket. Something to consider. We don't talk about taxes enough, I think, because for the most part, we are not tax professionals. Now, I used to be a tax professional, so I used to do taxes for a living, both corporate and individual taxes. And I worked for the Franchise Tax Board once upon a time. So I have an idea of what that means and what it looks like. And I still do taxes to this day. But that being said, I am not a tax professional anymore, and I wouldn't advise anyone on taxes at any time. But you have to understand what that is. And if we have to bring in a tax professional in, there's tax breaks to be considered. Those are factors you need to think about when you're purchasing a home. So with all these different things, which pathway are you going to take? The renter's path or the homeowner's path? The homeowner's path just has so much opportunity down the road. And I spoke briefly about, what it looks like when you are talking about appreciation. And I'll just briefly, I don't want to bore you with the numbers there because we can dig into that a little later, but to just briefly talk about what those returns look like. On that $475,000 purchase I was talking about, in year one, when typical annual values go up about 4.5% historically, over a year you're going to gain about $18,000 in equity. In year 5 it's about $120,000. That's if you sold the home and paid your agent. And by year 10 it's almost $300,000. And that includes what you would pay to sell the home. That is not just the value in total. That is, you have to pay your agent or agents to sell that home. So let's look at the numbers. Let's look at what works for you. Let's talk about your goals, what you want to do. We can make a short-term plan or a long-term plan. I'm here for it. Jesse Rivas, Keller Williams, Central Valley. Subscribe. Hit the like button. Reach out to me. DM me. Let's talk. Have a great day.